Hello traders and welcome to the London Forex Broadsheet's weekend wrap of the markets. The euro traded in a relatively small range during the overnight session, moving between the 1.3500 area and the neutral pivot point. The pair range traded in New York but looked to finish near session highs as crude futures rose and stocks found some enthusiasm. The euro area trade deficit was released at 6.1 billion in August, seasonally adjusted. Analysts had anticipated a much smaller read of negative 5.4 billion. Furthermore, June's trade gap was also revised higher from negative 6.4 billion to negative 6.7 billion. The euro is going on 2 weeks now that it has been range bound, caught in a wide channel between 1.3780 and 1.3260. The RSI is also reset to the 50 line several times as the pair continues to channel with no real conviction. The pound traded virtually flat in Asia, but was hit by a wave of selling orders in Europe. The pound fell approximately 100 pips in a few minutes and was able to find a solid base at the 1.7250 area. Similar to the euro, today's volume has so far been exceptionally weak, but the pair was reaching its best levels in New York as stocks advanced. The sterling can be seen here forming a pennant as price bounces back and forth. It is really a 50-50 toss-up on whether the pair wants to go long or short and will depend on the country's economy in the coming weeks. The Aussie fell during the overnight and early New York sessions, after falling 140 pips to just below the neutral pivot point at .6761. The pair advanced in New York as commodities rose and stocks advanced. The Aussie has become locked in a pennant, bouncing back and forth, not able to break higher or lower. Should a break come, resistance will be seen in the .7250 area, while support can be found at .6330. The CAD moved in a 40 pip range during the Asian session, but the pair moved higher to test the neutral pivot point at 1.1840 during the Europe session. During the last few days of trading, the pair more than doubled the daily ATR. The pair range traded in New York even as crude futures gained over $4.25. The loonie has started to channel sideways, unable to break higher or lower. If a long break occurs, the pair will run into heavy resistance in the 1.2130 area. A short break could see intermediate support at 1.1530 and then at 1.1300. The Swissy moved in a tight range during the overnight session, trading between the neutral pivot point at 1.1375 and the 1.1320 support area. The pair rose in New York as Treasury yields declined. The Swissy has been range-bound all this week. The pair found resistance at 1.1485 and solid support at 1.1300. The pair is currently trading in an ascending triangle. This pattern tends to break to the horizontal line. The yen fell 70 pips during the overnight session after failing to break through Thursday's high. The yen moved just below the neutral pivot point when S&P futures declined, but gained in New York as stocks were bought. In economic news, Japan's Tertiary Industry Activity Index decreased to negative 1.4% for August. This was sharply lower than analyst expectations for the month and significantly lower than the July reading of 1.2%. The yen is seen here in a pennant formation with resistance seen in the 101.70 area and support in the 99.50 area. The RSI has been bouncing like a pinball, as has the price, back and forth. If the pair breaks to the topside, resistance will be seen at 103. And a break lower could see 99.20. In Asian equities, the Nikkei gained 253 points or 2.78% to close at 86.93. The Australian S&P ASX slipped 42 points or 1.06% to close at 39.70. In European stocks, the German DAX rose 210 points or 3.43% to close at 47.81, while the UK FTSE gained 201 points or 5.22% to close at 40.63. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 88.52 after falling 127 points or 1.42%. The S&P closed at 940, down 5 points or 0.62%, while the Nasdaq finished trading at 1711 with a loss of 6 points or 0.37%. Crude oil for November delivery was up 3.18% to close at $72 per barrel. And gold for December delivery was down 2.13% to close at $784 per ounce. In Treasuries, the 2-year notes yield fell 2.2 basis points to 1.606%, while the yield on the 10-year note fell 4.6 basis points to 3.916%. Overall, the data released this morning continued to paint a very negative picture of the economy. Housing starts fell to a 26-year low in September, and the preliminary reading of consumer sentiment for October fell by the most in the history of the series. On the positive side, Warren Buffett wrote in the New York Times that he is buying U.S. stocks at this time. While Mr. Buffett dispelled notions he could predict where markets would be next month or even next year, he did say the time to buy was when others were fearful. President Bush said the government's extraordinary response to the credit crisis will revive the U.S. economy. Quoting, "It took a while for the credit system to freeze up. It's going to take a while for the credit system to thaw." Mr. Bush made this statement before the U.S. Chamber of Commerce today. Bill Gross of PIMCO believes the global response to the financial crisis may soon begin to restore investor confidence. This concludes the London Forex Broadsheet's weekend wrap of the markets. We appreciate you making us part of your trading day, and we hope that you have a fantastic weekend.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.